unatoa unasanya, unapea mwingine kwa mwingine kwa mwingine hivyo hivyo. Na ni juzi sasa tukakuja tukapatana na Stanbic, wakatutrain kuhusu mafanikio ya Stanbic. Tukapenda sababu ilisema kama hauna title logbook tunaweza kukupea loan. Tukafungua account, wakaanza kutupea pesa. Wakanianzia na 4,000, sasa kidogo kidogo nikalipa, wakaniongezea tena ikafika 5,400. Ninaweza lipa asubuhi, baadaye masaa ninakopa tena, na nisaidia kuongeza stock, kulipia watoto shule na kutumia kwa nyumba chakula, vitu ndogo ndogo kama sukari. Wenzangu nilikuja nikawaambia hii Stanbic naona itanipeleka mbali, sababu haihitaji karanda, na ningependa sasa Stanbic iongeze pesa ndio yani nipate stock kubwa, hata nipate kuongeza wafanyikazi wanifanyie biashara, alafu tuingize pesa mzuri, biashara ikipanuka hata nipate mahali pa kurent, alafu baadaye tunakuwa tumegrow. So ningependa hata soko ijue kuhusu Stanbic, hata kuhusu huko maeneo ya Mrisafu waweze kutembelea watu alafu wafungue account na Stanbic.
The thrilling world of businesses in the city. Mato, you on speed dial. Looking for help with his LPO, he needs to deliver laptops fast. Enter Stanbic Bank, the game changer in LPO financing. Ana get to expand his horizons. Huyu hapa ni Max, aki-import bills, lakini yuko in a tight fix, like his favorite pair of tight sweatpants. Working capital solution from Stanbic Bank in a come through. Sasa and expand his fashion empire to the max, literally. When our dada, a mobile money super agent, gets frantic calls to Hawana Float, through our digital solution, MJK Dada Boss can send floats to a sea of agents to keep them all afloat. Grow your biashara and unlock your horizons with our payments and collections, vehicle and asset financing, unsecured bid bonds, LPO financing, insurance, cross-border solutions, and so much more. Stanbic Bank is regulated by the Central Bank of Kenya.
Kelvin Omwamba here from the hills of Mount Kenya, and we are here today to plant 100,000 trees. Corporate social responsibility, and not just about talk, but actioning too. Let's go Stanbic.
Wamama wanapitia changamoto mingi sana, sababu majukumu amebeba ni mingi sana. Kwa majina naitwa Grace Kemuma Maragia. Market ya Tabaka, mimi ni women rep. Niliona mavazi ni kitu cha muhimu sana. Nauza both men na women. Hii biashara nimefanya kwa muda wa miaka 25. Changamoto hiko, ukiwa na dead stock utaona vile utapunguza bei ili ile stock ipate kuenda. Kuna wakuchukua deni akose kukulipa. Nilipigiwa simu kutoka kwa kaunti nikielezewa nisanye wa mama ili tukue pamoja, tuletewe seminar, tuambiwe ni nini kama mama anaweza faidika kutoka kwa Stanbic Bank. Stanbic Bank waliingia wakatupea seminar, wakatuelezea jinsi mama wanaweza ungana na Stanbic. Ukisapewa pesa unarudisha polepole kisiri kivyako na akaunti yako, una shughuli na mtu. Uendi kutafuta guarantors wa kusainia alafu upewe loan.
Hello and welcome back to the Blue Space, where bold ideas meet Africa's future. My name is Susan Chugwe.
Nikaanza kutumia kwa biashara yangu. Baada ya wiki moja nikapigiwa simu kutoka kwa kaunti, nikaambiwa
In East Africa, growth often crosses.
Na hiyo pesa ilinisaidia nikaongeza stock yenye sikuwa nayo. Sikuwa naleta yebo. Sasa nikaenda nikanunua yebo nikaleta gunia mzima. Sasa nimebaki na kidogo tu, lakini faida yangu nilikuwa nimepata tayari. Kama ni kwa uwezo wangu, ningependa tena mniongezee zaidi. Naona miaka 5 kutoka sasa, nitakuwa ninaongeza chenye sina kwa boutique yangu. Ama nifungue boutiques zingine 2, sehemu zingine. Naomba sana kama mnaweza kuja hivi mtuongeze tukue wengi, alafu limit yetu mtuongezee ile ikue at least nzuri. Mama ni mtu anajituma sana kwa familia yake. Wakisaidiwa, wamekuwa wamesaidia jamii.
This is Stanbic Executive Banking, built for your ambition. You want financial stability? You grow your money. You want an upgrade? You got it. You shop? You unlock discounts. You pay via card? You get rewarded. You book a holiday? You get a discount. Your cover, your peace of mind. You worry about your kids. You secure their future with Summer Plan. You're frustrated by rent. You get affordable housing at 8.99% flat rate payable in 25 years. You need cash advance urgently. Your son graduates. Ambition never stops with Stanbic Executive Banking, and neither should you.
Unajua bila pesa naye huwezi fanya kazi. So pesa ikikuwa mingi, kazi inakuwa kubwa. Kwa majina naitwa Florida Chepkemang. Mimi ni mfanyabiashara hapa Kericho. Nauza cereals. Nilianza hii biashara 2009. Vile nilianza hiyo biashara ilikuwa na changamoto, lakini baadaye tukakuja tukashika laini, sababu niliona kuna wakati wa mavuno vitu inakuwa chini kwa bei. So ikifika wakati sasa hiyo mavuno imekatika, bei inakuwa mzuri, unapata pesa mzuri. Sana hatukuagi na mkopo hapa sokoni, tunakuwa na merry go round. Unatoa unasanya, unapea mwingine kwa mwingine kwa mwingine hivyo hivyo. Na ni juzi sasa tukakuja tukapatana na Stanbic, wakati train kuhusu mafanikio ya Stanbic. Tukapenda sababu ilisema kama hauna title logbook tunaweza kukupea loan. Tukafungua account, wakaanza kutupea pesa. Wakanianzia na 4,000. Sasa kidogo nikalipa, wakaniongezea tena. Ikafika 5,400. Ninaweza lipa asubuhi, baadaye masaa ninakopa tena. Na nisaidia kuongeza stock, kulipia watoto shule na kutumia kwa nyumba, chakula, vitu ndogo ndogo kama sukari. Wenzangu nilikuja nikawaambia hii stand naona itanipeleka mbali, sababu haihitaji karanda, na ningependa sasa Stanbic iongeze pesa, ndio yani nipate stock kubwa, hata nipate kuongeza wafanyikazi wanifanyie biashara, alafu tuingize pesa mzuri, biashara ikipanuka, hata nipate mahali pa kurent, alafu baadaye tunakuwa tumegrow. So ningependa hata soko ijue kuhusu Stanbic, hata kuhusu huko maeneo ya reserve waweze kutembelea watu, alafu wafungue account na Stanbic.
The thrilling world of businesses in the city. Mato, you on speed dial. Looking for help with his LPO, he needs to deliver laptops fast. Enter Stanbic Bank, the game changer in LPO financing. Ana get to expand his horizons. Huyu hapo ni Max, aki-import bills, lakini yuko in a tight fix, like his favorite pair of tight sweatpants. Working capital solution from Stanbic Bank in a come through. Sasa and expand his fashion empire to the max, literally. When our dada, a mobile money super agent, gets frantic calls to hawana float, through our digital solution, MJK Dada Boss can send floats to a sea of agents to keep them all afloat. Grow your biashara and unlock your horizons with our payments and collections, vehicle and asset financing, unsecured bid bonds, LPO financing, insurance, cross-border solutions, and so much more. Stanbic Bank is regulated by the Central Bank of Kenya.
Kelvin Omwamba here from the hills of Mount Kenya, and we are here today to plant 100,000 trees. Corporate social responsibility, and not just about talk, but actioning too. Let's go Stanbic.
We are here at Kangaita Forest. Such a beautiful morning, as you can see, with a lovely background of nature. One of our key pillars of sustainability is climate change mitigation and adaptation. We are proud to be part of this noble initiative, and our target is to plant 1 million trees in 5 years. We work together with our community groups and partners like Nature Kenya to conserve the environment, protect biodiversity, and also to improve the livelihoods of the community around us.
This is part of an initiative of restoring Mount Kenya for water, for hydropower, and for food. This restoration initiative started in 2018 when we carried out a study identifying degraded areas within Mount Kenya. Collaborating with the community forest associations across this landscape, around 28 groups across Mount Kenya. We've been supporting them through partners like Stanbic to be able to mobilize and have capacity to plant trees, to propagate trees, and also do restoration within the forest. Our focus is on indigenous tree species, because indigenous tree species are known to have more species of biodiversity and also support in sequestering more carbon and also enriching water replenishment capacity.
Kangaita at large, tuko na nursery yenye iko na capacity ya 50,000 but inaweza enda hata 200. Tumeshikiliana na Nature Kenya, wana collaborate na Stanbic Bank. Hiyo imesaidia community juu tumepata pesa kama community, bado tunalinda mazingira.
Today I managed to plant around 34 trees in total. I'm looking forward to uplift the environment and make the nature a bit more beautiful for the people who are coming after us.
I have planted 12 trees, but in total we have planted 1,000 trees today. It's been a great experience, especially contributing to the Sustainable Development Goals, in which Stanbic is clearly aligned.
I have planted 30 trees, and it has been an awesome, fantastic day. We need to improve our environment by planting more trees to create more water catchment areas so that we can improve our weather conditions.
I was able to plant 34 trees. Such a wonderful experience. I'm hoping and grateful that I have an opportunity to impact the environment.
I've planted 15 trees and I'm happy to have contributed to the sustainability story, Stanbic for Nature.
I love connecting with nature. So today gave me that opportunity where I have to plant something that will be used by the next generation. Touching the soil, washing my hands in the river, just been amazing.
We got our hands dirty for a clean environment for these and the coming generations.
Stanbic Kenya for Nature.
I realized that the family business isn't just a job, it's a generational calling. In 1974, my grandfather and my uncles opened a small supermarket in Nakuru. They couldn't have imagined that more than 50 years later we'd still be here, 3 generations strong, carrying that vision forward. When I first tested the idea of going beyond retail and into FMCG distribution back in 2010, I got on a truck myself. After a day's work, our first truck left almost empty, and so was my hope. But one order from one man filled it entirely. When I look at the people I work with, I see them as my family. Some have been with us for 30, even 40 years. When we made bold moves, building towers and financing fleets, Stanbic stood with us. Through SCAN, our family's charity, we've served over 1 million meals and helped children off the streets into schools and universities. There's a lot of customers that don't actually have access to working capital. We've managed to build an algorithm that allows us to offer them credit. From humble beginnings to a national network, Gilani stands as proof that when possibility becomes purpose, more is always within reach.
Wamama wanapitia changamoto mingi sana, sababu majukumu amebeba ni mingi sana. Kwa majina naitwa Grace Kemuma Maragia. Market ya Tabaka, mimi ni women rep. Niliona mavazi ni kitu cha muhimu sana. Nauza both men na women. Hii biashara nimefanya kwa muda wa miaka 25. Changamoto hiko, ukiwa na dead stock utaona vile utapunguza bei ili ile stock ipate kuenda. Kuna wakuchukua deni akose kukulipa. Nilipigiwa simu kutoka kwa county nikielezewa nisanye wa mama ili tukue pamoja, tuletewe seminar, tuambiwe ni nini kama mama anaweza faidika kutoka kwa Stanbic Bank. Stanbic Bank waliingia wakatupea seminar, wakatuelezea jinsi mama wanaweza ungana na Stanbic. Ukisapewa pesa unarudisha polepole, kisiri kivyako na akaunti yako, una shughuli na mtu. Uendi kutafuta guarantors wa kusainia alafu upewe loan. Nilianza kuweka pesa tu kwa account immediately vile seminar iliisha, nika register, wakanipea account, nikaanza kutumia kwa biashara yangu. Baada ya wiki moja nikapigiwa simu kutoka kwa county, nikaambiwa nimequalify kupata loan ya shilingi 20,000. Na hiyo pesa ilinisaidia nikaongeza stock yenye sikuwa nayo. Sikuwa naleta yebo. Sasa nikaenda nikanunua yebo nikaleta gunia mzima. Sasa hizi nimebaki na kidogo tu, lakini faida yangu nilikuwa nimepata tayari. Kama ni kwa uwezo wangu, ningependa tena mniongezee zaidi. Naona miaka 5 kutoka sasa, nitakuwa ninaongeza chenye sina kwa boutique yangu. Ama nifungue boutiques zingine 2, sehemu zingine. Naomba sana kama mnaweza kuja hivi mtuongeze tukue wengi, alafu limit yetu mtuongezee ile ikue at least nzuri. Mama ni mtu anajituma sana kwa familia yake. Wakisaidiwa, wamekuwa wamesaidia jamii.
In East Africa, growth often crosses borders before it hits the shelves.
I started the business in 1972.
This market remains one cluster.
It's rare to see actually the flow of FDI coming from Uganda into Kenya. In Uganda, this is the fourth expansion that we have been associated with as a bank.
At Stanbic, we back bold ideas.
The partnership with Stanbic has stabilized this business.
This was a $45 million funding solution.
This has been a landmark cross-border investment.
This is the story of a Ugandan bottler, a Kenyan market, and a bank that helps turn ambition into capacity. 50 years on, a founder's trust becomes an engine.
I started the business in 1972. My beginning was very humble, with a capital of 50,000 Uganda shillings, which I borrowed from the bank. Since then, I have had a good relationship with the bank, and our collaboration was quite good.
For decades, investments flowed from Kenya into Uganda until one deal reversed everything.
Africa is home. We drive our growth.
African growth isn't abstract, it's engineered, one structure at a time.
It's rare to see actually the flow of FDI coming from Uganda into Kenya. So having to support one of our leading clients on the Ugandan franchise, which been a client for about 20 years, and get handed over the Pepsi Cola franchise. So they picked on him and said, listen, come and see if we can grow our market share from a dismal 1% to something more respectable.
From 1% market share to a daring new challenge enabled by a trusted banking partner.
In Kenya, Pepsi only had a 1% market share. In Uganda, it's a complete reverse. Coca-Cola is 40%, Pepsi is close to 60%. So he had already established himself as a player that could demonstrate and bring the Pepsi brand. So when they wanted to really play in this Kenyan market, which is, as you know, is significant, they looked around the continent for somebody they could back. This is Pepsi, the franchise at the group level.
The brief turned 1% into momentum fast.
We actually built and created the structure from scratch to match the client's growth ambitions. And not only that, we had to align our risk team from a structuring perspective, navigate through land regulations to perfect our security in the Kenyan market.
A one-team mindset, aligned coverage, sector heads, legal and risk, keeping the transaction agile as realities evolved.
So it was a whole package, just the capital that we had to provide, which is close to $45 million to get this thing up and going. The Kenyan entity was a startup. So we're going to rely heavily on the balance sheet of the Ugandan entity to make this work.
Finance is the spark, execution is the flame.
The bespoke funding structure addressed some key considerations such as tenor, the quantum of the facility, the security package, and we structured an accordion feature. And what that does is it allows the client to upsize their facility in the event that they need to increase their funding.
Beyond lending, the bank advised on setup, logistics, and ramp up, turning a plan into a plant.
So actually it's perhaps one of the most exciting transactions in this year in the region, what we're looking at. And we speak about manufacturing as a sector becoming double digit, is to anchor in investment, anchoring in growth, new job opportunities. If you look at tax issues and revenues, the architecture for growth, what this transaction shows is that our convictions to build long-term growth, build business in our market, is part of our DNA as a group.
Scale with responsibility, win with inclusivity.
In Uganda, this is the fourth expansion that we have been associated with as a bank. And why this is important for us is that it helps the company broaden the manufacturing base. It has an impact in terms of contributing more to the fiscus and also in terms of deepening or broadening the employment base of the country.
Beyond lending, partnership, sector depth, and presence where the work happens.
The expansion is very transformative. It actually unlocks access to quality products, a local product, however supported by a global brand, and it aligns with the transformative agenda of the government. It also energizes the ecosystem in Kenya, i.e. the value chain, the suppliers, the distributors, and it also enlarges our regional capability and capacity within the East African region.
As volume scales, so does the ecosystem. Distributors, stockists, wholesalers, suppliers, and jobs.
The site we are standing, we have over 450 staff who are directly employed by us or through our contracted partners. We also have our distributors who currently total around 500. And if you look at that number, we are probably offering indirect employment to another 10,000 Kenyans.
The lesson, banking the ecosystem. Big client, SMEs, staff, suppliers, and growth compounds.
Because we are able to curate that solution in this market and we provided a facility, we now remain as the largest lender for both entities within the market. I also believe that in this area, we start building a new nuance of how do we solve for public sector entities.
Ambition validated by velocity.
Growth isn't just given, it's built. It's one decision, one bold move, one partnership, one deal team, and one client at a time.
This is Stanbic Executive Banking, built for your ambition. You want financial stability? You grow your money. You want an upgrade? You got it. You shop, you unlock discounts. You pay via card, you get rewarded. You book a holiday, you get a discount. Your cover, your peace of mind. You worry about your kids, you secure their future with Summer Plan. You're frustrated by rent. You get affordable housing at 8.99% flat rate payable in 25 years. You need cash advance urgently. Your son graduates. Ambition never stops with Stanbic Executive Banking, and neither should you.
Some days I'm up, some days I'm down. It feels like weight up on my shoulders. But even though the road that I'm on is long, I know this for sure, nothing's gonna keep me from dreaming more. I'm gonna keep standing tall. I keep growing, I keep growing, I keep going, I keep growing, I keep growing, I keep growing, I keep moving. This is your financial freedom. I keep growing, I'm getting better every day. Keep growing, I'm getting stronger every day. I keep growing.
Congratulations, the share loan has been approved. Really?
I keep growing, 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 I keep growing.
Good morning and welcome, ladies and gentlemen. My name is Lilian Onyach. I head the brand and marketing function for Stanbic Bank, Kenya and South Sudan. To everybody joining us this morning, to our customers joining us, to our teams joining us, to the investors and members of the media, thank you very much for joining us this morning. This morning, we will walk you through our half-year financial results. And the way we are going to run this session for today is we're going to start off with the chairman of our board, Stanbic Holdings Board. Our chairman, Mr. Joseph Muganda. I like calling him Joe. Mr. Joseph Muganda, who will set the stage with his opening remarks. This will be followed by our regional chief executive. Our regional chief executive will set the scene from a regional perspective and how we are tracking from a strategy and what are our achievements at the half-year point. We will then have our CFPO, who will share with us our numbers and how we are tracking against this strategy. Ladies and gentlemen, thank you very much for joining us once again for this session. And we are going to have a Q&A session at the end. And I'd like to welcome you to please do put in your questions, because at the very end, we're going to have a Q&A segment where my panel is going to take in the questions based on what we have shared today. Without much further delay, I'd like to invite the chairman of our board, Mr. Joseph Muganda. Karibu.
Good morning, everybody. Dear shareholders, investors, analysts, and members of the media, on behalf of the Board of Directors, I'm pleased to present Stanbic Holdings PLC's results for the half year ended 30th June 2026. The year began with optimism, but that was soon overshadowed by the emergence of the conflict in the Middle East, reminding us that disruption has become the new normal. Despite these challenges, the Kenyan economy remained resilient, supported by government interventions that maintained macroeconomic stability. The Central Bank of Kenya held the central bank rate at 8.75% through June 2026, reflecting a cautious but supportive policy stance as inflation rose gradually but remained within the target range. The successful transition of the Kenya shilling overnight interbank average Kesonia benchmark in February 2026 enhanced transparency in the banking sector's credit pricing mechanism. This, among other factors, supported the progressive recovery in private sector credit growth to close at 9.3% by June 2026. Industry non-performing loans also declined from 17.6% in mid-2025 to 15.3%. Against this backdrop, Stanbic Holdings delivered a strong balance sheet growth of 27%, crossing yet another milestone of Kenya shilling 600 billion in total assets. Profit after tax rose by 1% to Kenya shilling 6.6 billion, reflecting the offsetting effects of balance sheet growth and previous margin pressures. In line with this performance, I'm pleased to announce that the board has approved an interim dividend of Kenya shillings 1.64 per ordinary share. These results reflect our continued focus on understanding and meeting our clients' shifting needs in a dynamic environment, our continued focus on bolstering our operational capabilities and risk management practices to support delivery on our 2024-2026 strategic priorities. It was also evident in the shape of our earnings and balance sheet evolution. Throughout this period of executive transition, the board continued to provide strong oversight. In March, Dr. Joshua Igara was appointed Chief Executive of the Stanbic Holdings PLC following the retirement of Mr. Patrick Mweheria. At the same time, the bank's Head of Personal and Private Banking, Mr. Abraham Ongenge, was appointed as Acting Chief Executive of Stanbic Kenya Limited. I would like to express my gratitude to Mr. Ongenge for his steady leadership and stewardship during the last 5 months. The board appointed Mr. Michael Mutiga as the new Chief Executive of the bank, subject to relevant regulatory approvals, and is committed to a smooth transition and supporting him in the executive team in the next phase of driving Kenya's growth. Looking ahead, we remain cautiously optimistic. While credit growth recovery is expected to continue, we remain mindful of external risks, including global energy price volatility and the rising political activity ahead of the next election cycle. Our focus remains on supporting our clients, prudent capital allocation, robust risk management, and delivering sustainable returns to shareholders. I thank our shareholders for their continued confidence, our clients for their loyalty, our employees for their dedication, and the board for its guidance. I also extend my appreciation to the government of Kenya and our regulators for their continued trust, support, and partnership. Asanteni San. Thank you.
Thank you very much, Chair, Mr. Joseph Muganda. Key highlights for me as the Chair was taking us through his remarks is the evolution of the balance sheet, and we'll get to hear a little more about that. He talked about the operational capabilities and the risk management practices that we will delve into in a little more detail, aligned to our strategic priorities. Ladies and gentlemen, the chairman has shared with us, nobody would have expected what happened at the beginning of this year. And so to share with us the macro outlook from a regional perspective, what defined the half year of 2026? How did we fare on as Stanbic, Kenya and South Sudan in terms of responding to the changes in the environment? Now, join me in welcoming Dr. Joshua Igara, our Regional Chief Executive.
Thank you, Chairman, for the introduction. And let me welcome our investors who are joining us this morning, our analysts, members of the media, colleagues from Stanbic, and our partners. The chairman spoke a little bit more about the context of this year. And over the last 6 months, one question that has dominated across corridors this year has been, are we turning the corner across our markets, across our regions, and especially across the continent and what we've seen in the Middle East? And I hope that today, when we speak about the results, and Dennis Musa will speak much more in detail, we'll have enough evidence to answer that question with much more confidence. So the story of our first half is not that every single measure in our performance has turned. The story is that the direction of travel is quite clear over the last 6 months of the year. The green shoots at the beginning of our headline numbers point in the right direction. We have continued to strengthen our franchise over this period. We have continued to invest in client experience, enhance our digital solutions and capability, and more importantly, protect our quality of our portfolio compared to where the industry is today. And we have also maintained a lot of discipline that investors expect of a very strong financial institution. So the message for me as we look at our first half is that recovery is visible, and Stanbic is building a momentum for the next phase of our growth. But before I speak a bit about the environment and also later on hand over to Dennis, it's important to understand how we operated, the context of our markets, how our clients have performed, that ultimately shapes our results for this first 6 months. Because context really matters. If you look globally, I'll share some slides. If you look at the global context, just to paraphrase as the chairman mentioned earlier, you can see what has happened on the left side. Growth is moderating, from 3.3 to 3.1%, and inflation levels have heightened, 4.1 to 4.4%. If you look at oil prices, because of what we saw early in the year, they have remained exposed because of the geopolitical activity we had. So that's not an easy environment for any of our businesses or any of our environments. But I think that's precisely the environment that rewards preparation, what I call as disciplined capital allocation, and the way we run our franchise across our different business segments. And so you can see that will give us confidence on how we build our businesses over time. In this context, we can call it a war-shocked global economy, gives us a lot of this optimism in how our numbers have turned for our businesses. And generally, we nowadays speak about getting into an environment of perma-crisis, more challenges we have, but we are able to prepare ourselves for the opportunities that arise. And nowhere is the opportunities much stronger than the continent. Across Africa, if I give you a lens on what we see, growth is higher across, and we speak much later about East Africa, but we have headwinds across many markets, and you can see some countries are growing much stronger than 7%. Some are growing. So overall growth is 4.2%. So for Stanbic and the entire Standard Bank Group, Africa is a great opportunity for us in terms of growth. And it's a present one. You see opportunities, the trade corridors in terms of moving of our goods and services. You see in significant infrastructure investments in our markets. You see a lot of work being done on energy sectors and a lot of trade across our corridors in the east and in the southern part of the continent. So that growth creates opportunities for our clients. And I would say that's what we did as a business over the first few months of the year, and we continue to do. And we work closely with various partners and our clients. So the reflection on the continent remains a bold one, and we continue to build. And when you reflect on East Africa, which is closer home, the story is even much more compelling. Across the region, East Africa remains perhaps one of the strongest, fastest growing contexts of the continent. And you see growth is growing, projected to 5.9%, with many countries slightly ahead of 7%. And what is driving that? You're seeing regional trade is expanding across the markets. You're seeing infrastructure continue to be invested on in our markets. A lot of digital-centric, digital adoption is going on in our markets. And the markets are more connected, especially where we are in Kenya, in Uganda, Tanzania, Rwanda, the DRC, and South Sudan, and Ethiopia. And for that matters for a bank that you've invested in like Stanbic, because when confidence remains strong, capital starts to flow. And when capital is moving, opportunity starts to flow in the markets. And that, for me, is the opportunity that we see across the regions, which we are so excited to be a large player. And perhaps when you zero down into the Kenyan context, where we were much more closer to, and where we are strongly operating in Kenya, the macros have been very solid for the last 6 months. The fundamentals remain very healthy, whether it's growth, although it has eased from last year. Inflation has remained well contained, some elevation in the last couple of months. Our foreign exchange reserves have remained extremely strong. Interest rates have eased considerably in the last 6 months, the last 1 year cycle. And the central bank rates reduced, as Chairman mentioned earlier, from 9.75% last year to 8.5% to June. So in many respects, we've seen a transition in the banking sector. So rates are down. Margins are under pressure. But client activity has continued to increase over this period of time. And that's why it's encouraging for what you are seeing beneath the headline numbers that Dennis will speak much later about. The signal for private sector credit growth, for me, that is perhaps the most important number to remember about these first half results. A year ago, credit growth, the private sector was 2%. And Chairman mentioned about it, now we are at 9.3%. And for a bank, that significantly matters. Because when business starts investing, confidence starts to return to our markets where we are today, and capital starts becoming more. And that is the value that what we see from our clients. So if I give you a perspective of our client activities, a year ago, clients were saying, do we preserve more capital? Do we preserve more liquidity? Today, clients are asking, can we deploy more capital? And that shift is important in the market that we are in today. So the earliest sign of growth is not always going to be higher short-term profits. It's a higher level of confidence that we see. So the question now is, how is that confidence showing up? And is our team at Stanbic able to take opportunity in the markets we operate? So this is another quite valuable slide for you. If you look at where is growth coming from, where is opportunity coming from, and we're seeing it across infrastructure, you're seeing it on energy sector, you're seeing across trade within the region, you're seeing it across border payments, you're seeing that also in diaspora investments back in our market. You're seeing a lot of work for SMEs work in our markets where we are today. And we are seeing a lot of work in terms of just volumes. Actually, our volumes for trade are up 19% for the last 12 months of the year. And trade remains one of the most clear architecture of economic activities. Because I am always a believer that when goods are moving, business starts to grow. Capital starts to circulate across our markets. And overall, our economy starts to build and to grow over time. So our franchise is well positioned, not only in the domestic market. We are part of a global network as a strong anchor with Standard Bank. So trade, investment, capital flows, connecting Kenya into the region, into the continent, into the global market, something we do extremely well. And at the same time, we remained very disciplined on the growth, the quality of growth we have seen. Competition remains intense. There are fiscal pressures across our economy that we always follow closely. There's global uncertainty, as the chairman mentioned, that has not disappeared, but our approach remains balanced. And when growth is disciplined, we are very confident that we can build the journey for sustainable second half and the future of the stock that you've invested in. And increasingly, we are seeing more support from the opportunities we see. So the question you may ask is, how is our strategy turning around to address the opportunities we are seeing in the market? So I'll speak about our strategy over time. There is evidence in our markets today. We don't have a change in the markets that we are operating in today. We remain confident in the priorities to transform our client experience. We remain open in terms of executing with excellence and to drive sustainable growth and value for our businesses. Despite the cycles that you've seen in our market, strong institutions don't always change direction every time a market shifts. We stay focused, we remain solid in executing better, and we continue to invest in the right capabilities, support our clients, work with sectors of the economies. And those ambitions, which is a growth of a double-digit growth in revenue, 14-16% over the medium term, our NPL ratio below 9%, and Dennis will speak about that number because we are well within that range. So that strategy delivers value for our clients, and that's, for me, is how the board and our teams are working closely to deliver value in our markets. I will speak a little bit much more about how do we do in the last 6 months, because it's important to see, is the strategy delivering the ambitions we've set? And this slide just tells you the tangible elements of the things that our business continues to have, and it's where you link ambition to execution. So if I pick just a few numbers that you have, I spoke about opportunities in energy sector, for instance. So we have invested and supported more than 34.2 billion, which is $260 million in the energy sector. If you look at our support for our women entrepreneurs and data propositions from the beginning, we've lent more than 54.3 billion since inception, trained more than 23,069 young people in digital skills, enabling them to connect to the markets where we're operating today. If you look at our active customers digitally, they are up by 29%. If you look at active customers, this grew by 11%. Trade volumes are up by 19%. Brokerage volumes are up by 76%, and many more measures that you have. But what these numbers have in common, you may ask, is not just activity. It's that clients continue to invest. Trade seems to be compounding in our markets, and clients are growing. And when clients are growing, our franchise will continue to grow. And Chairman spoke about a stronger balance sheet ahead of 600 billion in the first 6 months of the year. So we are seeing strong engagement in the markets where we are, across trade, across digital platforms that we have, across SME businesses, and even into the capital markets. So my sense is that when business relationships strengthen across different sectors of the economy, across different segments, across currencies, that diversification, which we are good at as an institutions, may not always maximize short-term returns, especially when the rate cycle changes for interest rates. It just strengthens our resilience and consistency to deliver long-term value for our shareholders. So that is the numbers that we have. And our clients' activity gives me confidence that the economy is turning, we see them growing, and my view will be that as we deliver, this is also recognized. It's not just me speaking. We see a number of external recognitions for our brand, for our organizations, and we don't do the work we do for recognition. We do the work we do because we are confident about impact, the trust clients are putting into us, and the long-term value the shareholders are putting in our brand. But we still do get recognized. And it's important that our performance continue to be recognized across many sectors, across the franchise. So not just in one area, whether it's our clients, whether it's across products you see, whether it's around sectors, and whether it's about communities. And for investors, that really matters a lot. Because durable performance for our business does not come for a singular product for our business or one sector we are good at, but across different elements of our business. So it comes from a franchise which has been trusted, diversified, and executed. So whereas we don't do the work for recognition, it's a demonstration that it's a confirmation of our journey of how we move forward. So before I hand over to Dennis, let me talk about just what I reflected on the first half of the year. strong growth in balance sheet, and I'll speak about some numbers after just in a minute. There's confidence in the way our client activity is growing, how our strategy is progressing, and how we are executing on that strategy. And that confidence in our strategy matters a lot. At the same time, we recognize that the momentum we are seeing in our businesses, especially in an environment where rates have reduced in the last year, margins have come under pressure, doesn't always reflect on every single measure in our pipelines. And Dennis will speak much more about our P&L outlook for the first half. And that's not unusual in an easing cycle or in a turning cycle from what I see. What gives me confidence is that we are seeing underneath the numbers, and those numbers are a sign of a strength of our brand. And in lower rates of interest, or in a lower rate environment today, those indicators matter even most, because they tell you where future growth is going to come from. They'll tell you where stronger client activity is going to be from, where we are seeing trade volumes from, where we are seeing digital adoption from, where we are seeing SME activities running, and definitely where we are seeing private sector activity growing season by season. So the story for the results we're announcing today is not that every measure stands. The story is that the direction of travel is becoming stronger, and we have a stronger brand that is running into the second half of the year. 4 things I want you to remember as Dennis comes to speak. In terms of scale, our balance sheet reached 602.2 billion in assets. This is the largest growth we've seen. It's 27% in terms of the size of the balance sheet. In terms of trust of our clients in our franchise, our deposit level increased all the way to 421.7 billion. If you look at our discipline of managing our portfolio, our NPL ratio reduced from the initial to 7.3% compared to an industry rate of 15.3%. We continue to see trade growing at 19% year on year. We saw digital adoption and customer growth up 29%. So that gives you, those numbers just don't speak about statistics. I hope you will see that they speak about a franchise that is being built and those foundations of the franchise that we are becoming. And that's why I'm confident about what comes next. And with that remarks, let me hand over to our Chief Finance and Value Officer, Dennis Musau, to take through the financial outcomes and the numbers behind my presentation. Thank you.
Good morning, and thank you very much for joining us this morning. Thank you, Chairman, and thank you, Joshua, for speaking through what's happening, the environment we're operating in. Thank you for speaking about the global macros which shape the way we think about business, the way we think about capital allocation, and the way we think about our clients. And thank you for talking about our strategy execution, because that's the nuts and bolts of how we have performed. I will speak to some of the drivers and how they've shaped the balance sheet in a bit more detail than Joshua has provided, and then the outcomes on the income statement and some of the contribution from the various businesses that we have. We have been investing in increasing our services and our banking to SMEs, and it's starting to show in our SME customers. Our SME customers increased by 18% in this financial period, and that's demonstration of relevance to the number one sector that drives banking activity to the tune of 40 to 45% in this market. There's a dividend coming through from our digital investments. We've seen our 90-day digitally active customers grow 76% year on year. Again, evidence that some of the investments that we've made in the last while on improving our services, ensuring the stability in our core banking platforms and the channels that we use to serve our customers continues to improve. We saw digital transactions increase by 17% during this period. We disbursed vehicle asset finance instruments to the tune of 11% year on year during this period, and brokerage volumes went up 29%. So there is evidence that our customers are transacting more with us, there is evidence that the investments that we've made in our digital platforms to serve our customers are bearing fruit. That then translates to the balance sheet growth that Joshua has alluded to. You will see that our total assets, if you just draw a line over the last 4 years, has nearly doubled to 602 billion from 474 billion in the prior year. That's 27% year on year. Customer deposits and customer loans have followed suit. You will see a nice little bump in our customer assets, especially in the first half of this year, coming from the prior year, and that is also in line, but ahead of what we've seen in the private sector credit area. And then as we diversify, you will see that last bar graph showing assets under management, which is a business we started about 2 years ago, hitting 7 billion. Let's unpack the balance sheet a little bit. So we've spoken about the total assets, but what really is exciting about the shape of that balance sheet is if you look at the ingredients, you will see 48% of our asset base is actually sitting with customers, and that is where we would like a lot of our franchise value to come from, and that's also grown, in line with the total balance sheet growth. There is some transitory assets and prudential holdings in our financial investments line, and that's for liquidity purposes, but also awaiting deployment. Deposits on the other side, you will see that deposits contribute 70% of our funding base. Again, another line that we watch very keenly. And what's exciting is that 28% bump year on year to support and to drive the asset base and growth of the franchise. And then you can see at the bottom, shareholder value continues to grow, aligned with the performance. Looking at the income statement, interest income went up 5%. There is a lot to be unpacked there in terms of rates coming down. The reality is in this market, we've seen rates reset under the new pricing framework that the chairman spoke about, which is widely known as the Kesonia stroke CBR. So we've seen a reset on the local rates. We've also seen a reset in global rates for our foreign currency balance sheet, which stands about 48% of our total balance sheet carry. Those two components have meant that despite a significant bump up in the balance sheet, there was muting in terms of the net interest margins, and I'll show you what that looks like a little later. Cost of funding ticked up by 6.7%, and this is in line with the deposits growth, but also rationalizing. Our deposits went up 28%. Cost of those deposits went up 6.7%. So we did manage our cost of funding, but the reality is, again, this is an investing market. It's a yield-chasing market, and therefore, cost of deposits is ticking up. We did see a 7% growth in our fees and commissions. Very happy to see trade fees particularly go up by 28%. Very happy to see our digital fees grow by about 8% during that period. There was muted advisory activity in the IB business, in the investment banking business, and therefore that had an offsetting effect. But very happy to see that, again, some of those things that we've chosen to do in the last recent while coming through to support the business. FX income continues to be under pressure. Hasn't fallen as much as it did fall in previous years, but FX income came down about 8%. Margins have remained largely flat. There is proportionality between the various business units, but largely remained flat year on year. And all of us know the currency has been operating around the 129 area. So that's the outcome of the FX business. Operating costs up 5.3%. aligned to inflation, but also an outcome of the investments that we've been making and extracting efficiencies as a result of those investments. Very happy to report that part of that is actually the fact that we've invested close to $20 million over the last 3 years in this strategic cycle in our digital platforms, whether it's upgrading our core banking platform, whether it is the new mobile app that is quite well rated in the market and attracting quite a bit of customers. It is what is driving that digital activity that I was speaking to. Whether it is a new platform that we've just launched for SME customers who said we want to use one platform which allows us to do everything that we want to do for our financial needs. Stanbic, it's attracting quite a bit of customers in our business. That is what is driving that cost. So quite happy that we're able to maintain those within inflation, yet deliver those type of investments. In terms of cost of credit and cost of risk in impairments, 50% down year on year. What's exciting for me is that our coverage ratios continue to increase. Our coverage ratios improved from about 62% to 68% year on year, and therefore that is not being less conservative. It is actually demonstration that our book is getting better, our customers are paying, and as the economic environment improves, our customers are finding fortunes, and we are continuing to do more business with them. Our profit before tax went up 8.2%. Our tax increased faster than the PBT on account of some tax savings we had in the base in the previous year, and that's what leads us to our PAT print of 6.6 billion for this half year. Some key statistics. Net interest margin, I spoke to this, went down 122 basis points. It's really a function of your balance sheet mix. So we've seen a lot more demand on the FCY side this year than we did see in the previous year. It is a metric and a balance that we track very closely, but it's also evidence of what clients want to do. So clients don't walk through the door and they want a dollar loan, and we say to them, we can only give you a local currency loan because that is what is higher margin for us. We respond to what the clients are asking for. The second piece is I did speak to rates resetting. So we did speak previously about the reduction in T-bill in benchmark rates in the previous year. That has since settled. So if you're looking at prior year against this year, you're looking at a point where you are higher coming down, and now you're settled at the bottom. And that is what is explaining that net interest margin. Our cost to income ratio ticked up to 49.5%. It is something that we'd like to see come down as we generate more revenue to within the strategic target of 41 to 43%. But it's something we're working on without slowing investments and without undercompensating our staff for the hard work they do. Cost of risk, 50 basis points, very, very happy to see that. Return on equity has gone down to 16.1%, and that's on account of the lower earnings against a higher equity carry, which is the demand from the balance sheet. You would see that balance sheet calls for equity, and therefore we're holding higher equity. But the returns haven't come through as yet. Earnings per share increased by a few cents, and the interim dividend has been rationalized to ensure that we can continue financing the growth. Previously and going forward, we are still going to be paying dividend in line with our policy, but we continue to watch the three principles that we've discussed in the past. The first is, can we finance growth? Number two is, can we absorb any risks that we see in the horizon, and that is managed within our risk management parameters. My last slide is to talk about the various businesses, and starting with the right, because green is always good. Our South Sudan business done extremely well, more than 100% growth year on year. So very happy with the team in South Sudan. Shout out to the team in South Sudan. You've done a very good job. SBG Securities, the business that manages securities intermediation, also does share exchange and did a very big transaction towards the end of June, and also the business under which the asset management business is housed went up more than 100%. So well done to the team that manages the SBG Securities business. A bank assurance business, and again, another anchor of growth for us, and one that we would like to see grow very fast at 17% year on year. Well done, Cyprian and the team. Some very good work going in that, and looking forward to seeing that notch up to 50s and 60s, etc. And then bank, as I've explained, the main challenge there being revenue print on account of reduced pressure, albeit against the backdrop of increased balance sheet size. So that all boiled together is what gives you the 6.6 billion in profits that we've reported in the half year. So happy to pause there. Thank you very much, and looking forward to continuing talking about the growth of Stanbic as we continue to live our purpose. Kenya is our home. We drive her growth. Thank you.
Thank you so much, Bwana Musau. Thank you so much, our CFO. And indeed, Kenya and South Sudan, our home, we drive the growth of the two countries. Ladies and gentlemen, we are now going to move to our question and answer section. And as we do that, we'll have a small interlude just to ensure that we do have my panel team set up here, ready to take the questions. Key highlights, future indicators, I think Daktari spoke to this, and you spoke to the numbers. You're talking about 17% growth in digital. Daktari spoke about trade and the growth that we are seeing in that particular area, 16%. We talked about growth in SME customers, the customer activity increasing. But Bwana Musau, we also talked about some numbers that have slightly declined. And those are the kind of questions that we are expecting this morning. And we want to invite you to please do share with us your questions. We're going to have a very 1-minute interlude as we just set up for the panel questions. Thank you very much.
I realized that the family business isn't just a job. It's a generational calling. In 1974, my grandfather and my uncles opened a small supermarket in Nakuru. They couldn't have imagined that more than 50 years later, we'd still be here, 3 generations strong, carrying that vision forward. When I first tested the idea of going beyond retail and into FMCG distribution back in 2010, I got on a truck myself. After a day's work, our first truck left almost empty, and so was my hope. But one order from one man filled it entirely. When I look at the people I work with, I see them as my family. Some have been with us for 30, even 40 years. When we made bold moves, building towers and financing fleets, Stanbic stood with us. Through SCAN, our family's charity, we've served over 1 million meals and helped children off the streets into schools and universities. There's a lot of customers that don't actually have access to working capital. We've managed to build an algorithm that allows us to offer them credit. From humble beginnings to a national network, Gilani stands as proof that when possibility becomes purpose, more is always within reach.
This is me at Stanbic Private Banking. What does it feel like? It's having my own world-class private banker. It's me receiving my World Elite card. It's living a rich financial legacy for my family. It's making power moves. It's living a little. It's accessing a private airport lounge. It's me having access to offshore banking opportunities. It's having my loved ones covered. It's more than banking. It's investing skillfully. It's planning wisely. It's living joyfully. It's banking easily. It's me walking boldly into my future. Start your journey. Visit www.stanbic.co.ke. Stanbic Bank is regulated by the Central Bank of Kenya.
It's okay? You can hear me? Confirming that you can hear me? All right, great. Ladies and gentlemen, welcome back. We are moving to the question and answer section for my panel. And I think the first question, if we can just set that up. I'll direct the first question to Bwana Musau. So we have seen the loan growth going up 24%. And I remember you always tell us that it needs to be in the range of 20s before we start talking about proper growth. So loan growth is up 24%, deposits are up 28%, NPLs improved, impairments fell, yet the PAT only grew by 1%. Why should investors believe earnings growth will improve? Dennis.
Yeah, I mean, thank you very much, and that's a very powerful question from the person who provided that question. Lillian, the way kind of business works is you look at the leading indicators, and then the outcomes and the lagging indicators come to you. We're coming from a period where private sector credit growth wasn't there. I mean, last year we talked about negative at the start and then started ticking up 2%, 3%. And now we are celebrating 9.3% and hopefully going into double digits in the second half of the year. So that's one point that is is that evidence that there is recovery. But then linked to that is our own growth, because the market is showing 9.3%. We're showing 24% through the cycle. And actually, if you look at that slide that I shared earlier, it shows where we were at year end, where we were at middle of last year, where we were at year end, and where we are now. And therefore, it's not episodic. It's not something that happened just before the end of June. It's progress that has been building. It takes then time to translate that to earnings, because if you book a facility, to get your full year return, your full year earnings, you need to go through the entire year. So that, for me, is the evidence that we're going to see the growth and the returns improve for the investors. The other piece to reflect on is that there is margin compression, and that's a reality. I mean, we have analyzed the Q1 results that were printed by the sector. We have analyzed the full year 2025 results that were printed by the sector. The margins are under pressure, but we prefer to have 4% of a bigger balance sheet than 6% of nothing. So for me, to the extent that we continue to see growth, we continue to see growth in the right sectors, and we continue to see that then translating on our balance sheet into customer activity. That is evidence that there's earnings and there's returns for our shareholders into the future.
Thank you, Bwana Musau. I'll now move to Daktari, our RCE. I think one of the highlights of previous presentation has always been the number that we announce on dividends. And so, excuse me, seeing at the number that was announced today by the chairman, why has the interim dividend reduced from 3.8 to 1.54 shillings despite stable earnings?
So let me just pick up where Dennis left. Leland, if you remember what's really going on behind the market is in an easing cycle, we are building growth of credit into the private sector. We always forget that we had 2% a year ago. And the objective for the central bank and the industry is to put in more credit to support sector growth in the economy. That is absolutely important. So over time, there's repricing, correct? There's repricing of facilities in the market. And that's a normal within a cycle. It's important to understand that. So we are much able seeing a double digit. We are getting there where the central bank view was. So the dividends, because we have a stronger growth, the more the assets we are growing, which is a good opportunity for clients, it's important that we are able to have enough capital balanced for that growth momentum. So that's really the point in the first half. But the interim dividend isn't the final dividend. So we do have our own policy to deliver dividends of 60% of our earnings, and that will be delivered this year.
Dr. Ri, allow me to ask you a question on a comment that Musau made. He talked about certain sectors seeing growth and certain sectors seeing stress. Which sectors do you, in your view and the presentation you shared with us, continue to experience stress?
So the bigger questions for us has been industry still remains with, and then speaking about the asset quality, that we are growing with a disciplined mindset and momentum. If you remember the first full year, our target was to have a non-performing loan ratio of 9%. We are actually down to 7.7 for 7.37. And it's important that then, whereas stress remains in the industry, we've been very cautious and selective, Lillian, on how we are building that momentum. So I would say we've been much more decisive enough on which clients we are supporting ourselves. Stress remains, particularly on public sector. That's an area that we continue to support very pragmatically on how we are going to build. Fiscal consolidation is an area sovereign is doing. So that's an area we continue to see, delays in payments. But I would say from our growth, I'm not concerned that we are not getting pockets. At that 24% growth in our own assets, it just shows you that we are able to put capital into the sectors that need the growth.
Okay. I will now move to Bwana Musau. This is a question I think that you expected. A significant growth in balance sheet. Where is that growth coming from?
So, one of my little joys, Lillian, is to see all our businesses and all our franchises grow. And I did articulate that in the presentation. We have 3 subsidiaries, but one that has Kenya operations and one and South Sudan operations. And for me, seeing 17% growth in our bank assurance business, seeing more than 100% growth in our SBGS business, seeing more than 100% growth in our South Sudan business, very, very grateful to the teams there. And then seeing that offsetting of the challenges that, or the bumps that the Kenya business, the Kenya banking business has gone through. That for me is the outcome or is the impact of the diversification drive that we've had. There are certain sectors that have been winners. So energy infrastructure has been big for us, and we've continued to see that turn around. I was looking at some industry statistics, construction, manufacturing is turning around. We've been winners there. Agric, we've been big on agric, and it's not an area that you can overplay. But agric is important to this economy. We want to be relevant to those sectors that drive this economy. So we have seen that also grow on our balance sheet. So it's really nicely diversified. When I look at our own businesses and internally how we are organized, we've seen growth on the CIB business, corporate investment banking business. We've seen very, very good growth on our SME and commercial banking business. We've seen very, very, very good growth on our private banking and personal clients. We've seen very good growth on the insurance business and a bit on the asset management. So it's nicely distributed, and that's the power of diversification, because market headwinds will come at you if you're nicely diversified, that you're able to weather them.
Musau, I remember the slide on when we launched our One Stanbic strategy. And there is a particular number there, the number on ROE. There is a decline from 17 to 16. Why is that?
So return on equity is basically your profit against the capital you're carrying, and we have targets. The target we've set in our strategic cycle is 23 to 25%. The reality is we have seen the industry average is actually 18%. So there is that 23 to 25% is quite ambitious, and it's something that we still want to achieve. There is pressure on the earnings, and that's actually that ROE number is your linkage between the growth in the balance sheet and the lower growth in terms of the profitability. So the fact that our balance sheet, our the equity on the balance sheet has grown faster than the profit, which is a numerator in the equation, makes that number come down. But then on the long term, if you think about where we've come over the last 3-4 years, we had ROEs of 10%, and then we moved that up to 13, to 15, to 17, to 19, came back to 17, and now 16. So these are cycles you go through. You're in an investing cycle, you're in earning cycle, there are market headwinds, and then as long as you're building the right basis for your business, they should be able to correct. So 23 to 25% is still our ambition, and we're still committed to deliver it.
Okay, thank you. Colleagues and our audience online, members of the media, investors, investment community, you've had the feedback on the ROE. Dr. Ari, there is a question, I think you kind of touched on it, but the issue of dividend keeps coming up. You talked about interim, but the investors are asking, should investors expect lower full-year dividends going forward, based on these investments that you've talked about and that you're putting on your digital?
Let me say one thing, Lillian, that our results tell a bigger story than earnings alone and dividends. If you look at the signs of the growth in our markets, client activity for me is the most exciting, that you have depositors saying 28%, we're doing much more activity with you. Our loans are growing up by 24% for clients who need facilities to grow. That's a key part of the bigger picture for driving momentum for the economy. This is a fundamental point of how do you grow the economy? How do you support the sectors? We are getting away from caution to investment to growth. And that's why you need capital. So it's important that conversation is seen. But overall, from our own organization and from the board, we always will deliver our dividends within the policy that we've set, which is a 50-60%. So the dividends will still be there at the full year. But for now, the more important part is actually using the capital we have to be able to support the momentous growth. Our loan growth today is significantly way ahead of the market. So that's what we need. So I can give confidence that doesn't change the policy of the bank. It's that it is very much determined by the growth momentum we see, and that's what we want to support in the second half of the year.
Thank you. Thank you, Dr. Ari. There is a question on infrastructure. Many times, this is the bank that is referred to as the infra bank. And the bank has highlighted great opportunities in the infrastructure area. What is the revenue potential that you are seeing in that space?
We can spend a lot of time speaking about every single part of our market. Let me give you about the potential across our markets. On the continent, we estimate closer to $100 billion a year gap of infrastructure investment and financing. Correct? Our own countries, we think about the national vision for the nation, we are looking at more than $2 to $3 billion. That's significant investment that we are looking for. It is one of the largest sectors between real estate and construction. These two are a double-digit size of the economy. So, actually, they are three largest part of the economy after agriculture. So the issue for us is whether you're doing the roads, your railways, your energy sector, your ports, your digital superhighways. Lillian, I can't tell you anything you will do. The digital connectivity, all that is a big part of our growth momentum. So the revenue for us, I would say it's a big part of our growth story. And it's one that go into the medium term. This is not something you're saying is done. If you think about your Kenya to Malaba to Uganda to Kigali to Congo, that project, it's a massive one. You think about the dualing of the Naivasha all the way from Lironi kind of projects, you talk all the way to Nakuru. So I can't give you the exact figure in terms of quantum of millions of dollars, but it is a catalyst way. And then what you're noticing is that the trade infrastructure is very connected to trading, the corridor into the markets, the traders and SMEs, the individuals who are investing, education sectors. So it's I would say it's one of the sweetest item we've seen, not just here, but across the continent. And we are a bank that has got the knowledge and ability to support our client in infrastructure.
Thank you.
Lillian,
Yes.
if I can just add something to that comment, because I think it's one thing to talk about the revenue potential, but can you think about the purpose potential? We say Kenya is our home, we drive our growth. And
Correct.
if I just, think about, I lived in Nairobi before the Thika superhighway was done.
Yes.
And if you lived in Nairobi before then, just imagine what the investments we've seen along this very short corridor between here and Thika since it was done. Now, multiply that by the distance between Rironi and Mau. And think about that in the context of Kenya is our home, and we are the center of driving that Kenya of growth, that growth of Kenya. So that, for us, while revenue is important, translating that investment, that opportunity into the purpose that we live is critical.
Truly partners for growth. I do have a question on NPL, and I'm not sure between you two gentlemen who will take it. NPL ratio has improved. I think we've talked about how the industry average is much higher. It remains above 15%. We have released the results showing an improvement to 7.3 against a target of 9. The question that I'm receiving is, how sustainable is this performance? And are we being too cautious in how we approach risk?
So Dennis is the one who should answer the questions. But let me give a view. So the NPL ratio is a measure of the quality of the decisions that you've built in your teams. And that's important to understand the models, the thinkings, and the philosophy around how do we lend. And we're actually quite one of the strongest institutions. We think about our teams under risk and credit. And that's an important selection on clients that we put on our portfolio. So it's not an accident. It's a decisive nature of what we want to achieve for our clients. But I would say, Lillian, that we have more room to be able to build more growth momentum for our SME sectors, for our individual clients who are borrowing from us in retail banking in the medium term. So we're a bank with the opportunity to be able to take advantage of market share.
Okay. You want to add anything, Bwana Musau?
I think Dr. Ari has, you see, the beauty with this NPL ratio question is you get asked it whether it improves or it goes the other way. And I think for us, it's an outcome of a lot of things. How we think about our clients, how we partner with them, how we appraise for credit, how we support our clients as they go through different cycles. So, and that then starts to translate in more trust, more requests from our clients to get credit from us, and that is translating to the growth that we're seeing. So it's a big pot that produces some of these ratios. And yes, the board is supporting us to be a lot more aggressive in financing sectors in that drive the growth of the country.
I have two more questions. One more question for you. Again, another number question. Is there a need for concern? Cost to income deteriorated from 48 to 49.
Is there a need for concern? Concern is a big word. To the extent that it's outside our target range of 41 to 43%, it is something I'm looking at. You look at this again. Ratios have to be unpacked into what are their components. So cost to income ratio is exactly that, costs against your income, and therefore you have to test: am I worried about costs or am I worried about income? From a cost perspective, we are very judicious in how we make our investments. You will see, and we've shown results every half year, every quarter. We maintain our costs just within inflation, even when we are making significant investments. So it is an area that I'm not too concerned about. Why? Because technology costs money. Our clients ask for it. Our people need to be compensated for the hard work that they do. So those are good costs to address. The other side of this is income, and income is a function of volume times price.
Right.
We've done well on volume.
Yeah.
That is what we can control. And then prices are behaving in a certain way, and we have a way to respond to them. So I'm not concerned. We're just responding to market dynamics that drive these ratios, again, focused on getting to, back to strategy.
Okay. Just two last questions, and they are to Dr. The first one is, what is management's outlook for the second half? And feel free to add in, Musau. Dr.
So if it's one message I'd like to leave our investors and stakeholders, is that we're increasingly seeing a lot of opportunities across different segments of the economy, whether it's trade, whether it's infrastructure, whether it's enterprise and regional integration. And our clients are showing that by the activities. So whether it's your deposit growth, which is up 28%, if you look at our loan growth, is up 24%, our balance sheet is crossing up 600 billion, 602 billion, and obviously, didn't talk about the quality of our loan portfolio. So that momentum, Lillian, should provide significant growth in our revenues in the second half. So we are up for a solid, much more bullish performance in the second half of the year. And that's what I would say. So, and we are excited about the opportunities across the economy. What I will always remind, what is clear to me actually, Lillian, is ultimately when you think about easing cycle from the central bank and having lower rates, is about catalyzing the economy by growing credit access. And that is what builds your sectors for growth. And that catalyzes your revenues. So it's an exciting moment for us. So there was, a year ago, we had 2% growth at the industry. We are now at 9% growth. This is getting towards the double digits, which is what the governor has spoken less than a year ago.
Okay. Musau, do you want to add anything?
Going into the second half of the year, for me, the focus is growth, and the message to the investing community is that the evidence is there that we are growing. The message to our customers is we're open for our business. We appreciate your support. I mean, you don't get to grow 27% without trust and confidence in your customers. And we encourage our customers, come and talk to us. Tell us where we are serving you well and where you want us to do more with you, because ultimately, this is our country. We all want to grow together.
The last question before we move to closing remarks. The question is from an investor, and it asks, what are the key priorities, Dr. What are the key priorities investors should monitor over the next 6 months to 1 year?
So Dennis did share a slide around what the outlooks looks like, Lillian. So if you look at go back to our strategy page, if we are looking at growing our revenues into CAGR of 14 to 16%, that's an important part to look at in the next 18 months and 24 months. We looked at what is our ROE that is getting up into 23 to 25%. NPL ratio is already within target range, and our cost to income ratio, which is out of range, but we have an ambition to be able to achieve the 41 to 43%. And finally, it is looking at our level of client engagement and activity. You did see trade is up 19% year on year. Our lending to SMEs is up, and that activity for us is valuable for investors who are looking for momentum. As that comes, your revenue continues to build in the second half.
Thank you, gentlemen, and thank you to our audience. Thank you for sending through the questions. We will have now a section where we will speak to the media, really just unpacking our numbers and sharing in a little more detail what is our plan for the second half of the year. And as we bring this to a close, I'd like to ask closing remarks from my panel, and I'll start with our CFVO, Bwana Musau.
Thank you, Lillian. My closing remarks are a word of gratitude to our leadership, Daktari and the board, a word of gratitude to the Blue Bankers who wake up every day to go and serve our customers. Your efforts are the outcome that we've published today. A word of gratitude to our customers for continued trust and confidence in the brand that is Stanbic, and a word of gratitude to our investing community who continue to provide us with capital and trust that we will deliver long-term total shareholder return that is market-beating.
The chairman spoke earlier today about that the mood has shifted from caution to selective optimism, if you remember in the morning. And the key takeaway for me is that over the first half of the year, we are building foundations for future growth. We're strengthening our balance sheet and our customer activities. We are supporting them through financing. So I go back to the numbers that Dennis mentioned about a 28% growth in our total deposits from clients in the first 6 months, a 24% growth in our own customer assets in the first 6 months, and a 602 billion shillings size of balance sheet with the quality of our loan portfolio in terms of NPL at 7.37%. So that gives you, and I'm happy that clients are investing, clients are expanding, they are going into the corridors for growth, and that gives you a chance about the momentum of growth we're seeing. So that capacity is what the bank is ready prepared across the market, not just in Kenya, even in the region. So, and we'll continue investing with discipline, especially in terms of the quality of our assets, and that gives us a chance to be able to raise a stronger result for our organization in the second half of the year. So I'm excited about the results we announced today.
Thank you. Thank you to my panel, Dr. Joshua, and our CFVO for taking in the questions and responding quite ably to the questions that we have had today. Thank you to those who have joined us in this virtual session. Thank you for bringing in your questions and joining us once again. We hope to see you again in March next year as we now announce our full year results. Key takeaway for me, the future indicators are there. Being cautiously optimistic and really navigating this environment. Thank you very much for joining us this moment. And this is the end of our financial results, half 1 2026. Thank you very much and have a good day.
This morning we are out here in the Sabaki estuary to come and reclaim the environment through the planting of mangroves. It helps preserve the environment, which is an important facet of life.
Mama nature, mama nature.
Ile ni muhimu ni tulinde mazingira, kuhakikisha tumewacha mazingira vile tulioipata tulipozaliwa. Na benki imejitolea kuja kuwasaidia kulinda mazingira. Iko Nature Kenya, tuwasaidiana na breweries na makampuni zingine.
Tumefurahia sana kufika hapa na vile umetukaribisha. Thank you very much to the Stanbic family who've come. It shows the commitment that the bank has. And when we say Kenya is our home, we drive her growth, it's truly evident in the passion that we have in building Kenya.
Hewa safi ya tupuliza, hata ni dori dori.
Lazima tulinde mazingira sisi wenyewe. Hii bahari ikichafuka hii, kitambo itufikie kule juu, itakuwa imepambana na mikoko.
We're planting 1,000 mangroves as Stanbic Bank in partnership with Nature Kenya. We're very excited because this is part of our sustainability initiatives. We are on a target to plant more than 5 million trees. So this makes a small contribution to that plan that we have.
Today we've planted about 2,000 mangrove trees with the local communities. In total this year, including September, we've planted about 104,000 mangrove trees. Mangrove trees are known to sequester about 4 times the amount of carbon that inland forests do, which means that as a carbon sink, they are 4 times more effective than an inland forest.
Thank you very much to the community for having us, for Nature Kenya for organizing, our board chairman and our leadership team for coming along. We're super proud of this community and the work they're doing.
Kelvin Omwamba here from the hills of Mount Kenya, and we are here today to plant 100,000 trees. Corporate social responsibility, and not just about talk, but actioning too. Let's go Stanbic.
We are here at Kangaita Forest. Such a beautiful morning, as you can see, with a lovely background of nature. One of our key pillars of sustainability is climate change mitigation and adaptation. We are proud to be part of this noble initiative, and our target is to plant 1 million trees in 5 years. We work together with our community groups and partners like Nature Kenya to conserve the environment, protect biodiversity, and also to improve the livelihoods of the community around us.
This is part of an initiative of restoring Mount Kenya for water, for hydropower, and for food. This restoration initiative started in 2018 when we carried out a study identifying degraded areas within Mount Kenya. Collaborating with the community forest associations across this landscape, around 28 groups across Mount Kenya. We've been supporting them through partners like Stanbic to be able to mobilize and have capacity to plant trees, to propagate trees, and also do restoration within the forest. Our focus is on indigenous tree species, because indigenous tree species are known to have more species of biodiversity and also support in sequestering more carbon and also enriching water replenishment capacity.
Kangaita at large, tuko na nursery yenye iko na capacity ya 50,000 but inaweza enda hata 200. Tumeshikiliana na Nature Kenya, wana collaborate na Stanbic Bag. Hiyo imesaidia community juu tumepata pesa kama community, bado tunalinda mazingira.
Today I managed to plant around 34 trees in total. I'm looking forward to uplift the environment and make the nature a bit more beautiful for the people who are coming after us.
I have planted 12 trees, but in total we have planted 1,000 trees today. It's been a great experience, especially contributing to the Sustainable Development Goals, in which Stanbic is clearly aligned.
I have planted 30 trees, and it has been an awesome, fantastic day. We need to improve our environment by planting more trees to create more water catchment areas so that we can improve our weather conditions.
I was able to plant 34 trees. Such a wonderful experience. I'm hoping and grateful that I have an opportunity to impact the environment.
I've planted 15 trees and I'm happy to have contributed to the sustainability story. Stanbic for nature.
I love connecting with nature. So today gave me that opportunity where I have to plant something that will be used by the next generation. Touching the soil, washing my hands in the river, just been amazing.
We got our hands dirty for a clean environment for these and the coming generations.
Stanbic Kenya for nature.